Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Tuesday. Pretty interesting day. Yesterday we came in, thinking, would we get follow through? Would we break out of this range that we've been in? And to me, I was thinking, some stocks look good, but why would we have the power to break above all-time highs, the 2015 highs, considering where we came from, and still a lot of questions to answer. We still don't know exactly how earnings are going to be. We don't know how guidance is going to be. We don't know how the strong dollar has affected what's going to transpire. We also don't know when liftoff is, so why be so aggressive? So when we're not so aggressive, we look at the charts, and you need your stock selection to be key. You go to the SPX, which we do every single day, very methodical move, from the red dog reversal right here that took you above this downtrend after showing some digestion and commitment right there, broke the 8-day moving average, and also this upper area, which was 2,087. And what did we do? We retested this trend line. It was a little wishy-washy then, and then we had to stutter step up back to highs. So yesterday we did stall. Small little red dog reversal where we pushed through 2113, put a high in at 2114, one handle, and closed off those highs. So that pretty much got me out of my spiders, okay, and I stuck with some stocks. And then today, really couldn't rally, broke below the prior low, and now we're at this interesting spot. I don't think it's game over, but it also makes some sense to be a little prudent where, why take this home when we close on the dead lows? You never know what's going to happen. So tomorrow my plan will be to look for some kind of red dog reversal here where maybe, we retest. Remember this pivot from Fed Day? We broke above, what is this? This was 2,081, so maybe we want to retest this. Retest the 21-day or not. Let's go to the spiders because I think most of us trade that a little bit more, intraday. So if you look here, you will see that we did break this small little pennant. So if you were playing this for a potential digestion bull flag move from here, two highs right there, that should have been a little caution. And then today, when we broke below this three-day level, you could have gotten out of the way. So tomorrow, just like I said with the SPX, perhaps we retest this this pivot that we broke on Fed Day. So what I would write down for tomorrow, you write down 208.74 just in case we get a red dog reversal around this. The best scenario would be, open up, down, retest, come up, and then we still have commitment to this low, and that's that. If you want to be cute here and throw in some kind of Fibonacci, because I know a lot of you guys like to look at that. So if you want to show retracements for commitment, you go right here. Where is it? I'm getting a little blind in my older age. Where are we with the Fibonacci retracements? Oh, here we go. Fibonacci retracements. You go from like the start of this rally to the top, and right there, the 0.382% retracement was right here. So this is something that we probably could have held if we were really, really strong, but you could still see the 0.50, and this would be a spot where you would think we hold, otherwise it turns into a choppy mess. And I've seen us go down to this, but that would drive some of us to drink, and it's not even Thursday yet. So with that being said, that's the spiders. Let's take a quick look at some other sectors. You look at the Russell. It's had a really big move, and it is extended from the 8-day moving average, so you never want to be too big when you're extended. The last time this broke out was right around here. Okay, that's when I was long. I sold into this day, and it could shake the tree and pull back to here, so you want to be a little careful. Look where it came from. Look where it came from here. So it's been trending really, really well. So this isn't showing you that the world's falling apart. As far as the bios, though, at least it makes sense. Look, you look here, you look at the trend, you look how the bios have been following the 8-day moving average. Last tight pattern was when it broke above this little pivot, crossed this area, then got very excited. Remember on Friday, I was trading on the short hills, and a lot of people were saying, let's sell this strength. I think Prince from the VTF, a few of you guys, and you had the Biogen news, and we're like, don't chase this, perhaps sell it. And if you sold it that day, you looked at the bar, it's a pretty wide range Poen bar. You don't see this within this range that, pretty much. So if you sold that, or if you said, I'm going to get short, and I think we at least retest the 8-day. Well, yesterday we touched it, bounced off it, and then couldn't hold it. So now this is saying that perhaps, it could go a little bit further, and that would take you probably down towards the 21-day, which is right here. So for tomorrow, write down 355. That's your pivot. Tried to go today and failed, and from where we came from, you don't want to start too early, and even if you touch the 21-day, it could still be deemed strong. So at this point, no need to be, all in and buying the most shallow dip, but there are some things working. If you know the last few sessions we had, it works sometimes when you're consistent. Facebook, we had that big breakout above 82 last week. You go back, you take a look at Facebook, and we talked about the size of this channel, okay, how it was going sideways for 9 months, and then finally, after failing a few times at this upper resistance, it broke through and gave you follow through. This is when you could have seen us long on the VTF. That was a retest of this 77 area that it broke out from. Then this time it broke above and continued. At this point, it is extended from the 8 and 21 day, so hard to initiate a new long, but that also doesn't mean it's a short. It doesn't mean you have to just have, faded because you sold it early. For me, I was in Facebook here, I added there, and I was done with it on this day, and I haven't traded it since, which is fine for me. We wound up making our money today in Twitter. Twitter, boom, finally, right? This was in my 2015 thesis, this is my social media stock of the year. I guess I got a little lucky, or I just calculated anyway. Here was your gap up after earnings. Then built a nice consolidation, woke up with a small engulfing bar here, and then boom, just took out the 50. You could have added today above 49.25. I had that listed on in Twitter to add here. Play a breakout, and then it closed pretty well. People like, where could it go? How do I tier in and tier out? Well, I sold the options that I had for this Friday, but I held the ones for next Friday. I don't see why there's any reason why I can't at least, come up to here, but how it does it, we shall see. That's one spot. Here's another point of reference coming in a little closer to 52. So, I am still in the stock, and I'm in the options, and we'll see what happens next. As far as LinkedIn, this one's been choppy. I guess because it's capital intensive and thin and wide, it's not the easiest stock to get traction. But overall, still, big pro gap, not much traction. Coming into here, a little resistance. Tried to trade above this 265 with in conjunction with the rest of social media. But again, traders don't feel comfortable sinking their teeth into here because it's failed so many times. So wait for that to change. This morning, oil was a little bit stronger. Yesterday, I tweeted that I got involved in, First Solar and some options just as a feeler, and it actually wound up, working out pretty well today. The reason I liked it was because A, you had your big gap up after either this was earnings or when they said they were going to come out with that new issue, rallied, consolidated, held the 8-day, did not pull back, and this is also when oil kind of fell apart. So oil going down and solar's not going down, shows you relative strength, broke out. This could be your day one engulfing this. So still in the options. We'll see where that goes. As far as other stocks in that group, the SPWR, not as strong, doesn't get as much coverage. I actually sold it on the close just because I just didn't like the way the market closed, but I'm still in FSLR, but it still looks fine. It's still, holding the majority of this earnings gap, still above the 8 and 21 days, so still considered a strong stock. As far as some of the banks, still kind of wishy-washy. You got that small reversal yesterday, which was right here when it tailed through the highs, a little follow through to the downside from where it came from, not the end of the world. It's just the way the banks have been, no real traction. On the flip side, remember this, we talked about right here, okay, after the TLTs broke its accelerated trend line at the 8-day, broke the 21-day. This was when it gapped below intermediate support, and then what happened? Gap above. Anyone in technical land calls that an island bottom potential. Buy verse 125.76. If you did so, you had a nice little move, and then you had another inflection area, this 128.20, if I do remember, which was right around here. Now PS, it's filled this gap, and at this point, would I chase the TLTs and go long? No, but anyone who's been trying to short since here probably doesn't know what to do. At this point, above the 8 and 21 day. If you're still long from here, congratulations. You trailed it better than a lot of people out there. There's still some things to do. The market has its spurts, but it's definitely lethargic at times. I would talk about different time frames to different traders. It seems like for me, I tend to make the majority of my cash flow money between 9:30 and 11, and then what I do is I hold my positions and I put stops in, not where I want to lose money, but where the trade changes. So I try and put stops in order to keep me safe. So today I got stopped out of Apple, lost some money there. I tried it. To me, the jury is sort of still out on Apple. You know how I love to trade it, and life's a lot more fun when Apple's in play. Last big strategy we had was after earnings. You know, the stock gapped up. On this day, we bought versus that. It was great. Traded above the 120.50. Then you had your small red dog reversal right there. It also broke its trend right here. And then since it's been trying to build at some type of inflection area, right, the middle area, if you're long from the red dog reversal down there, then you really don't have much to worry about. If you're trading it, trying to figure out if there's any traction today, you probably got a little frustrated. I know I was in it from the start of the day. I added here, lost, and then I put my stop in at I believe 127.25, and now I'm flat Apple overnight. Tomorrow, if it hangs in there, maybe I'll get back into it. But at this point, still failing at this area, so no reason to be overly anxious here. But still in, if you're in from this RDR and you said I'm going to buy it at 122.11 with a stop here, then you're probably pretty relaxed. We'll see what happens here. If it breaks above this, probably be better for the overall market. You know, Netflix had some news. It was an upgrade today. First, decent wide range bar above the lower pivot, which is right here. You know, if you sold when the trade changed, when it broke the 8-day here, or when it broke below 470, you know, some guys were buying versus the gap, and you know, it's acting a bit better. Google was a rock star today. This broke out here. Remember when we were targeting this trade above, let me grab my little pencil, above this spot, took the 200-day back, came up, engulfed this upper range, gave you a corrective phase back to the 200, woke up right here, cleared this, and now it's right back to highs where, you know, who knows, maybe it stalls a little bit, holds higher, then you get another trade. It seems like, you know, Google's acting much better this year versus the year prior. I guess they like a financial CFO here versus a techie CFO. And that's really about it. Today's Tuesday. I'm kind of thinking tomorrow market holds in, not falls apart. I didn't go home long that much. I'd love to see it down open, see what goes green first. If we get one of those red dog reversals in the spiders, I think it is a crucial area. I know if we close much below this area right here, it's back to a choppy range. My gut tells me I think we hold, we shall see. But my gut's not telling me enough to just go home long the spiders. I'd rather just wait. There's been enough, you know, action intraday to make cash flow and stick with some trades versus, you know, taking a calculated guess, because that's what it is. And I also kind of think that Europe, that's been so strong, it's getting a little lethargic, and Asia, that was up 10 days in a row, might correct a bit. So it's going to give me a little inclination that I could be a little bit more patient perhaps in taking some indices, and I'll be more wait and see and not give anything back because it's been a good week or so. So with all that said, that's your recap. It's Tuesday. Tomorrow is hump day, Wednesday. Seems like tomorrow should be Friday, but it's not. So we'll revisit the markets tomorrow with Brittany. Have a good night.